You know, it's almost as if someone is ringing a silent fire alarm because it continues to be a mass exodus from the market that counters the popular financial TV soundbite that, oh, the stock market's the only game in town. For the most part, investors have been selling like crazy. And by the way, volume has been anemic throughout the entire rally, but it's getting worse. In the last week, more than $7 billion in equity outflows have occurred. That's the highest number in 12 weeks. People are dumping stocks by the boatload, even as it's clear that the Federal Reserve won't hike rates for a long time. In fact, I'm beginning to think that even December may not be in play. Now, today, stocks stumbled into a sloppy session all day long. And we finished the week slightly higher, but I want you to think about the last 2 days because that's your real story. The Dow's down almost 200 points since peaking on Thursday morning. All of a sudden, that robust second-half surge that spooked 3 members of the Fed is in swift retreat. The Atlanta Fed initially saw a current quarter growing at 3.5%. Their model now down to 2.9%. The New York Fed model is even more pronounced to the downside. The pace of growth in the second half of the year now, well, for this quarter, the Fed thought it was going to be 3.1%. This is the New York Fed. Now they have it substantially lower. Now, I got to tell you something. It's very interesting that the recent wave of missed economic data hasn't helped the market. And this is what I'm saying. I think that the whole bad news is good news crowd has got it all wrong. In fact, I think that this market needs good news to break out from here. On that note, make sure you sign up for my daily market commentary. It comes out every single morning. You need it. It's going to be a bumpy ride, so go to wstreet.com.